Yeah, so this is Guotai Junan and Haitong Securities, two of the largest brokerages, partially owned by Shanghai State Asset Administrator, looking to merge in a share swap deal. It's still pending regulatory approval as well as approval by board members and shareholders. But if it goes ahead, then it will put the total assets of these two companies to 1.6 trillion yuan, which would then put them above CITIC Securities as the largest brokerage of the country. And this comes about a year after President Xi had told regulators at a financial conference to nurture top-ranking investment banks in China to compete with Wall Street banks expanding into China. That's after Beijing had liberalized the sector to allow full foreign ownership in the sector in 2020. So analysts are expecting more deals to come as more companies vie to be that top 2 to 3 banks that are prioritized by policymakers to compete with global peers by 2035. That is the goal set by the securities watchdog.
And this is coming at a time when the sector has been hit by a slump in profits.
Yeah, so the sector has really been in doldrums for years. If you take a look at the Bloomberg index that compiles the performance of the 25 brokerages listed in mainland China, that's down by over 20% in the last 5 years. You have stocks floundering on the weak economy, and you have earnings also not looking very bright. If you look at CITIC Securities, they reported declines in the first half. Same with Haitong as well, down 75% in the first half. And the sector was also the target of President Xi's Common Prosperity campaign, which led to some banks calling on their employees to take a haircut in their salaries. And bear in mind that this is a sector that still has about 145 brokerages as of end of last year. So it's a sector that has a lot of room for consolidation, given that China has the second largest stock market in the world, and yet their brokerages lag far behind their global peers. If you look at Morgan Stanley, Goldman Sachs, take a look, their market cap above $160 billion, but CITIC Securities is about a fifth of that size. So a lot more room for this supply side reform to run.